And we're starting. Ladies and gentlemen, thank you so much for tuning in to what is going to be a very exciting event. This is one webinar that I've been waiting for. The Block presents the State of Prime Brokerage. I'm your host for this event, Frank Chaparro, Director of News at The Block, and we really have some of the three luminaries of the burgeoning, nascent crypto prime brokerage market. We have Greg Tussar over at Coinbase, Michael Moro at DCG's Genesis Global, and Nick Carmi at BitGo Prime. So we're very excited about this conversation. It's been a few months since all of these firms announced their respective offerings in the prime brokerage space, gate crashing the market, so to speak. I was giving our panelists a little bit of heat for announcing their offerings during my last vacation. They pretty much ruined it because I had to write 3 different stories that were basically the same story. So if you think the questions are a little tough today, gentlemen, that might be the reason why. A little bit of a payback. No audio, apparently. Someone says they're not hearing audio. Okay. So that is not something that you want. Can everyone hear me all right? Ralph hears just fine. Carlos hears fine. All right, so we're going to proceed. Some people can't hear. Connor King says we're Gucci. Thank you for the update there, Connor. Anyway, we're going to dive in. I'm going to ask a question that might be a little bit, I don't know, sophomoric, but I think it can help level the playing field since it has been so many months since all of you guys kind of came on the scene. And we aren't necessarily sure what some of you have been up to, especially Coinbase Tagomi, given that that's a unique acquisition play. Mm-hmm. So we'll start with Nick. Moro, you're going to go last since you're the sponsor. Don't want anyone to think we're showing favoritism. What does prime brokerage for the crypto market mean to you? We'll start with you, Nick.
Look, we've been talking about this for a while, right? It's prime broker in the crypto space means a lot of things for a lot of people, right? You know, the three company, Greg, Mike, myself, and Prime BitGo, we all have different views of what prime brokerage is. I don't think prime brokerage in the crypto space will ever look very much similar to the way prime brokerage is in the financial markets. It's going to be a variation of 1 or 2 different prime brokerage services, whether it's FX prime brokerage or equity prime brokerage or whatever the case might be. At BitGo, we took a slightly different approach from the way Coinbase Tagomi did and Genesis did. We came from a custodial platform, hot and cold wallets, and then we got into the borrowing and lending space, which was very important for us as the basis for what could become a prime broker offering. And earlier this year, we launched the ability to allow clients to trade with us. And we continue to add services. If you were to look at, if you just Google any of the large institutional prime brokers about the offers they provide and what they call prime services, we probably tick the box for many of these services. I'm sure also Tagomi and Genesis do the same, but from a different perspective. So for us, the key for us is we're not an exchange, we're not a prop shop, we're none of the above. We're a custodian that provides borrowing, lending capabilities as well as execution directly from the client's custodial wallets. You can trade directly through BitGo Prime from the safety of your account, of your wallets, without having to move any coins in and out. You can trade anonymously. Nobody knows who you're trading with. We're going to continue to add more services. It's a long journey. I mean, it's a long journey for everybody on this call. And I like it when I talk to people about prime brokerage in the crypto space, especially people who understand what prime brokerage is. We need to collaborate a little bit more. I think it's very important, to have some open collaboration between the adults in the room, if you wish. That's how we're going to get the industry bigger. That's how we're going to get more and more institutional clients to come in. That's probably a gaining factor for a lot of these large institutional clients coming in. Now, like, well, is there a prime broker in this space? And then when they look under the hood, right, they realize that prime broker to us is very different from what prime broker to them, sitting in their equity seats or fixed income or derivatives or FX.
And that's something that we're going to dissect, you know, what makes crypto prime brokerage different from how prime brokerage works in other asset classes. And you raise another interesting point, Nick, which is all of the participants in this panel, the other adults in the room, I hope I'm not counted among them, they're coming at this from different angles, right? We have Nick coming at it from the custody angle, Moro coming at it from the proprietary trading angle, and then Greg now operating under the auspices of an exchange. And so each, I think, provides their own unique benefits and their own unique challenges and obstacles, and we'll definitely unpack those and no holds bars. Maybe we'll get into some heated back and forth, but we'll definitely keep it cordial to the extent that we can. Moro, I guess since you're like above Nick on my screen, so we'll just jump to you, and then we'll go to Tusar. What does prime brokerage for the crypto market mean to you?
I think in short, a prime broker is simply sort of a packaging of all of the services that typically a hedge fund requires to basically operate, right? And most of the time it's kind of around trading and custody and margin, but it also involves things like fund administration, tax, as well as kind of the capital introduction type of stuff. And it's really just kind of being the central platform service provider that helps hedge funds do any and all of those activities that I mentioned in kind of one neatly, packaged type of delivery and service. And the idea certainly exists, the model exists in kind of the equities and the FX world, and we're trying to tailor our prime brokerage services to kind of the asset class and kind of the nuances and intricacies involved. And to your point, Frank, we'll kind of get into that a little bit later as to what that is. But that's the holy grail, right? It's how do you pull this off in this asset class, given sort of the 24/7 global nature with different laws and regulations and kind of the nuances associated with kind of the asset class. And I agree with Nick, like we all announced this back in May, maybe May, June, kind of somewhere in that time frame. Like, and it's an ambitious goal for any of us to try to say, hey, we're going to strive to be there. There's a roadmap and there's a path, but it'll probably take a good couple of years for everyone to kind of figure out how everything kind of works. And, and we're all at like different stages because we all started at different places.
Yeah, 100%. And I think Greg has the most unique stage from which he started. What does prime brokerage mean for the Coinbase Dagommi team?
Yeah, so I think it's a good idea to unpack this term because it's not very clear. It's not very specific about what services and who gets them and so forth. So I largely agree with Nick and Michael's definition that it's a bundle of services. In the equities world, it largely started with the idea that you could keep all your assets in one place. You might be trading with a lot of brokers around in the industry, but you really wanted to have one place where you could keep your stuff and then provide financing and all the other services that Nick and Michael described. I do agree that in crypto, it does largely start with, at least from our perspective, a custody-led and a safety and soundness of assets-led discussion, especially for new entrants into the market that are not as crypto forward, that want to make sure they're that they don't lose their stuff first and foremost. And so for us, that's been the same, but we've actually found differences. Like if you unpack, this isn't just for hedge funds. I think what we're seeing is an emergence of hedge funds, corporates, pensions, endowments, all of whom need different parts of that bundle. Some want just custody, some want financing, the recent OCC announcements also brought the potential for banks to come to play. And so we see, outside of just the narrow definition of prime brokerage, an opportunity with institutions writ large to provide some combination of these things. What we've actually seen most recently is in the combination of Tagomi and Coinbase's custody product, has proven to be pretty effective for us, is that the bundle matters a lot for new entrants into the space, right? The crypto forward folks who have been doing this for a while are very comfortable with moving assets around, trading in one place, borrowing and lending in another, and custodying at yet a third, are going to unbundle all those services and take sort of a best of breed approach. But what we find is that for people entering for the first time, being able to trade and custody all in one place and having somebody who is helping guide you through that process purely from an agency perspective, so has one job of navigating a complex market structure on behalf of the client, has proven to be a pretty effective bundle. Again, different people in that taxonomy of hedge funds, banks, corporates, et cetera, want different pieces of those things. But what we've seen is the bundle has proven to be quite powerful.
One aspect of the bundle that I think has been talked about the longest since even I began covering this market was the ability to offer leverage, borrow, and perform cross-platform collateralization. And that latter aspect of it isn't necessarily something that we've seen play out just yet in a strong way. What are we missing about cross financing in crypto prime brokerage? Why isn't it necessarily there to the extent that we thought it might have been?
I think Frank, Nick and Mike both made the point. I think that just takes time, right? For somebody to be in position, either in the case of listed derivatives, to be an IB and an FCM, to have the risk management tools in place. And I think right now, it strikes me what we see mostly as opportunities. I think that opportunity is there and exists. And in my prior world, that would have been in the professional clearing bucket of servicing market makers and liquidity providers and others who are already in the market but aren't doing it in the most capital efficient way possible, and I think would pay for a service that helps them navigate all the exchanges and so forth in a more capital efficient way. But the sort of the emergent opportunity that we're facilitating is bringing new entrants into the space, and this bundle that we're talking about is what we're most focused on. And I think you'll see that happen, but I think it's going to take some time before somebody's in the position of having the right risk management, the right derivatives expertise in place together with custody and all packaged together.
Moro, when we caught up ahead of the panel to sort of prep about what we'd be talking about, I felt like you were kind of trying to make the point that at this point, cross-margin finance may not necessarily be something that folks need at this point, or prime brokerage, service providers are offering tangential services that might, remedy that issue without necessarily getting to the heart of it.
So the cross-margin, I think the number one key, yes, there's operational things you need to figure out how to, and kind of the risk management side. But honestly, the number one thing is the availability of capital. It's how much liquidity and capital can be injected to support a cross-margining ability through a prime broker model, right? So you think about liquidity, spot liquidity. Let's say, I don't know what the real number is on spot liquidity, call it $30 to $40 billion a day, okay? And the Bitcoin market cap is whatever, 350 billion today. Our loan portfolio, which I think is kind of the largest in the industry, is just over 3 billion. Okay. And that's 1% of kind of like the Bitcoin market cap, right? And that's a fraction of just like 10% of kind of the trading volume on any given day. If you are going to have true cross-margining across, you need the pipes of capital and availability of capital to be much, much bigger, so that you could be able to support all of the trading activity that may happen across 20, 30, 40 different spot exchange venues, and be able to finance and have the capital to do that. Now, that doesn't mean Genesis has to solve the entire thing. The exchanges can provide capital lines and like trading credit lines and things like that to kind of support it. But like on the margin, you still need much more sort of outside capital, providing that margin and leverage trading into the space to really kind of make it work.
Mm-hmm. Carmi, you're muted. I'll unmute you. Or I think I can at least. I thought I had the power to unmute and mute. There we go. Oh.
While we're waiting for Nick,
go ahead.
I largely agree with Michael that the availability of credit and capital is a big issue in the space. I think the entrance of banks and potentially the emergence of a funding market, a repo-like market, to facilitate the generation of cash with Bitcoin collateral is one way that I think that will develop. I think one other consequence of that, second order effects of that today are funding spreads are quite wide. That's actually had an impact on how effective futures are in a way, and we've actually seen it's been a dampening effect on the growth of I think the futures market, because the roll costs and the other frictional costs have actually been quite high. So we've seen clients who started out in futures move to spot because the frictional costs there are enormous. And then I think the other thing is, as that credit becomes more available, these collection of businesses, which are already on a path to becoming scale businesses, accelerate much faster to becoming, funding spreads, which are multiple hundreds of basis points, look much tighter, much faster, and you have to be able to make money on much smaller net interest margins than you could today. And so these will be scale businesses, I think quite quickly.
And so the opaque nature, and there's also this aspect of the fact that the repo market that we do have is incredibly opaque. The rates market barely exists, right? And so all those things added up, you guys are saying, is contributing to the difficulties behind the launching a proper sort of cross-margin finance service. So how do you get around that, Nick?
Can you hear me now?
Yeah.
Great. Well, I mean, look, it's capital. You need capital, right? But the three of us can't solve this problem, right? You need the exchanges. You need the single dealer platforms. You need everybody to collaborate and work together. Like Mike made an interesting comment earlier, about a credit, right? If you look at the FX market, 30 years ago, almost 30 years ago, back in the mid-90s, everybody had to sign an ISDA. You had 10, 20 different ISDAs with 20 different counterparties, and you bought from one counterparty, you sold to the other, and it's very much similar to the way the crypto market operates right now. Then, in the late 90s, Deutsche Bank decided to get into the FX prime broker space, and they started solving that problem, right? But they can't solve it by themselves. They couldn't, right? They had a dominant point in time, they were dominant, but then you need more prime brokers, and you needed the exchanges and the banks and the counterparties all to collaborate and share in terms of the credit that they're able to share amongst each other, right? And the ability to allow for proper risk management. That's key. Greg pointed that out earlier, and I agree with him. Risk management is super important to making sure that everybody is happy with the way this market is operating. Spreads are very wide. we look at cross margining. I mean, cross margining in the financial markets did not become popular until early 2000s, when you have banks that are operating prime broker businesses as well as FCMs, and still they can't figure out how to provide a cross margin ability between different legal entities. I think in the crypto space, it's more streamlined because we all more or less operate out of the same legal entity to provide all of our services, right? We still, at least the three of us here on the call, haven't figured out how to do the FCM part of the equation, which without
I'm getting there, Nick. I'm gonna figure it out. Don't worry.
Somebody has to, But yeah, I mean, listen, it's gonna take all of us to work on getting this done, and it's gonna take all of us to trust that we are doing the right thing to get this done. It's not the one person task.
You're sort of alluding to a question that has been something I've been thinking about since May, when you guys all came online with your respective offerings, which has to do with the competition aspect of you guys all doing this, right? You guys started the week as a custodian, so to speak, a trading firm, and then in Coinbase's, from Coinbase's perspective, they already had somewhat of a wide-reaching business, but an exchange business is at the heart of it, right? Or retail brokerage business. And then you woke up the next day as a prime broker once you made these announcements, so to speak. And so, as much as I would love to see you guys all be kumbaya around a fire and grapple and figure out these complex market structure issues that will propel Bitcoin to 50,000, so we can all buy our, well, in you guys' case, probably your second reasonable sized home, but in my case, my first reasonable sized home. How does the fact that you guys all are now vying to be the same thing to an extent change the way in which you guys engage with one another and the way that the market is sort of shaped, right? Because at the end of the day, we're speaking with three of the most important firms in their respective vectors, and now they're all competing. So what does that mean for market structure? We'll start with Tusar.
Yeah, I think that Nick said it right. I think this group, in many ways, both competes pretty fiercely, but also collaborates, and in some cases are clients and have the kinds of relationships that a lot of large institutions do, which is complex and multifaceted. I do want to go back, Frank, to one thing you said, which was how sort of the centerpiece of our prime brokerage offering really isn't the exchange. The exchange is, I would think of from an order routing perspective, one of many places we go. The centerpiece of the prime brokerage offering really is custody for us, and Coinbase has been in that business for a very long time. Has a very large assets under custody that crossed 20 billion and has grown from there. And it was really around that the idea of building execution on top of it, from the perspective of Tagomi, it became clear as much larger people came to the space that the idea of facing a large, well-financed, credible institution was going to be super important, and the reason that we thought it was important to join forces with Coinbase. And we see very much building services concentrically around that. And so in many ways, it really is a custody-led sale from our perspective. And so I see, Coinbase very much as a very large retail business, an institutional business, which services all manner of corporates, hedge funds, crypto funds, just a very broad array of institutions, and then an exchange, which separately competes for liquidity from each of those two.
Mm-hmm. In terms of how competition is translating into the relationships all of your firms have, again, it's nice to talk about cooperating with one another, but is the door open, or has the door been open to Coinbase Prime routing to or sourcing liquidity from Genesis, or BitGo sourcing liquidity from Genesis, or BitGo sourcing liquidity from Coinbase. Have you guys been open to interweaving yourselves into each other despite fiercely competing over the same client base?
We're the adults in the room, Frank. Yes, I'm going to answer this very quickly. Yes.
Yeah.
I don't know if you guys disagree.
Same here. I very much see the opportunity to, from the perspective of the broker, seeking best price. We're always open to looking for pockets of liquidity for clients, and then from a custody perspective, we find all kinds of ways to partner with funds and other things. And so we'd like to be clients of Michael. We'd like for Michael to be clients of us, and same for Nick. And so I think that's already the case in many ways, Frank. So, but on the other hand, just to be clear, when somebody shows up and has a large transaction to do, we're going to compete pretty hard for that. And we're going to put our best foot forward. And, we think this bundle of things that we've pulled together and are now enhancing and integrating and is pretty compelling. And we're going to go try to win all of that.
Nick,
yeah, Frank, I think you're trying to get us to fight. It's not happening. Sorry. But I agree with Greg. I think the competition is definitely on the sales and biz dev side, right? Because you're kind of all going after the same investors and pool of funds and trying to kind of get them in. But when it comes to execution, it's a client business, right? It's ultimately whatever execution venue or liquidity partner is going to get you the best price, whatever that means on the kind of spot trading side or derivatives or on the lending side of the house. And I certainly think that when you think about it that way, then you don't really worry about who you're helping as far as who you're giving flow to. It's all about trying to kind of provide the best execution and client experience, frankly, for the clients that we do serve. Now, long term, I really do believe that clients, as much as we want them to do a one-stop shop, may end up with 2 or 3 different prime brokers accounts. You see that kind of in traditional markets, and I don't believe that it's kind of a one PB that wins everyone. And frankly, I do also agree that at some level the experience needs to be somewhat uniform. If the ways of doing things on the Genesis PB is very different than on Coinbase or on BitGo, and people have to behave differently from a UX perspective, I think that's a burden. That's a friction to kind of the crypto PB space that probably doesn't need to exist. And frankly, for us in the more crypto native firms, as much as we kind of think about each other as competition, if this space kind of keeps growing, the traditional PBs are going to find their place. Right. And it may not be kind of the Goldmans and the JP Morgans of the world. Maybe they get involved, but there's plenty of mid-tier PBs that kind of exist that knows that they'll never be Goldman. Right. But maybe they can take on the crypto guys and try to make a name for themselves in the space. And so, as we kind of look to the future, I think it becomes way more than just about kind of existing players. It's who else could potentially kind of step in.
Mm-hmm. I want to touch on the client base and what it looks like, but real quick, Carmi, when we've sort of laid out what the ecosystem looks like, the competitors out there, how you guys are all sort of working together, how does the picture we have right now resemble the way prime brokerage sort of came about in equities, 20, 30 years ago?
I think it's the same. It's the same picture. I mean, that's it's the same. I'm sorry I bring up the past, but 1997 when we were looking to launch fixed income prime brokerage at Credit Suisse. Now it shows my age, right? We decided to have a call.
He was 12. He was the youngest MD at Credit Suisse.
Still 12, you're right. But we were like, hey, what is, everybody's doing equity prime brokers. So we got together at the Fed with Bear Stearns, Solomon at the time, right, and Morgan Stanley and Credit Suisse. And we sat down like, okay, what do we do here? How do we replicate equity prime brokerage into fixed income prime brokerage? How do you use the same agreements? There is repo, there is stock loan, right? And there was collaboration between the banks, and there continued to be collaboration between the banks. But like Greg said, there was fierce competition on the sales side. I mean, look, at the end of the day, we have to survive. So that's, competition is good, but we have to have some collaboration between us to be able to get this ecosystem a lot better, right? And at the end of the day, collaboration is another form of risk management, right? That's, the more uniformity. Look, Tagomi, Genesis, BitGo, we're going to have different strengths and different weaknesses, but we all going to be able to complement each other. And I agree with Mike, even though the ecosystem is not as big as the financial markets, you're not going to find one prime broker that's going to be providing everything you need. You will need to have more than one prime broker in the crypto space, much more than you would need it in the financial markets, because there are different prime brokers and they have a lot different strength than others. And the clients are going to be able to capitalize on the strength of more than one prime broker to have the perfect offering they're looking for until things become more normalized.
Are the key components different than they were maybe when you were setting up that fixed income prime brokerage desk? Financing of positions, operational excellency, and maybe market access. Does it basically look the same in terms of what you're trying to provide?
It looks a little bit the same, but it's a combination of FXPB and an equity PB. That's like, if I were to take a step back and said, what are we looking at over here? It's a mixture of FX and equity prime brokerage into one. There is the component of I want to borrow, I want to lend, I want because I want better capital efficiency, and there is the concept of, hey, how can I do? I mean, crypto is a currency. You're buying dollar versus something. So you're buying dollars versus euros. The concept of being able to trade on credit through your prime broker, right, could be another solution. I don't think one solution is going to be the model.
The one thing I would say is different in the equity prime brokerage model, at least, is a large part of the financing is short financing. And right now it strikes me that most client demand for financing is margin long financing, as opposed to either fundamentally driven short positions, which isn't to say that it doesn't happen, but not at the scale at which it happens in the equity world. And I think as the universe of tradable crypto grows, as the amount of data grows, the presence of quant strategies and other things will grow. But right now, that's not a component, I would say, of crypto prime brokerage, and it's very much a component of traditional prime brokerage.
Interesting. What are you seeing in terms of the short books? Who's on the opposite side of the trade right now?
Frank, I'm sorry, meaning that who's borrowing to go short?
Yeah.
I would say to the degree it's happening, that they are fundamentally driven positions rather than quant strategies that trade a large universe of tokens. I think that, but I would say the whole space is still emergent. I think that when we say financing right now, what we really mean is people that would like to lever up long positions, primarily, from my perspective at least.
Yeah.
No, that makes
sense. I think that's right. I mean, only about 5, maybe 10% of our entire loan book is for shorting today. And I wouldn't even say it's not naked shorting either. It's kind of hedge selling, call overwriting, that type of stuff, as kind of being the natural sellers, because miners or whomever have production to kind of offset and it's just kind of a hedge play for them as opposed to just being outright short.
Mm-hmm. One thing, if you're kind of acting as a skeptic, so to speak, which I try to do sometimes, being a prime broker is an easy way to sort of move your valuation from here to here in many respects, right? So to what degree is that maybe pushing everyone in that direction, do you think, Nick?
I mean, look, we're in this to make money, right? And grow our revenue and grow our assets under management and grow our business. That's the, if we're not in it for this, then we should not be in it at all, right? But I really truly believe we're also in it because we believe in this market and we wanted to get it more adaptable and more streamlined. Don't misunderstand. We all want to make a lot of money. That's the path, right? So
I guess to put it differently, you know, I mean, we all want to sort of call ourselves prime brokerage, but is it really just, you know, putting lipstick on a pig that does custody, trading, execution, lending, order routing, and the like, and then calling it a PB? At this stage,
I don't think so. I don't think so. I mean, it's a lot of work to provide a prime broker-like service, right? I mean, you know, Mike can just say, you know what, I'm just going to be in the borrowing and lending business and I'm done, right? And it probably makes his life much easier, right? With BitGo, we can say, oh, we're going to, you know, we're going to stay in just the custody business, right? But then where's, you know, like we're doing ourselves a disservice, just like Greg would and Mike would, and to not only to our company and to our shareholders, but also to the community and to the ecosystem. Right? It's a lot of work to be a prime broker, even if you're offering 2-3 services, right?
Sure.
It's a lot. It's very taxing on the company. It's very taxing on everybody in the firm, from legal to operation to compliance to support to sales to risk management and everybody. So we're not doing it because, you know, we're doing it because it's the right thing to do.
What's the one thing that's missing? We've talked about cross-margin finance. That doesn't seem to necessarily be at the top of your guys' list for what's coming next. Is it derivatives, Greg? I know that was something on your radar. Moro, you guys are already doing derivatives. Maybe it's something else, but maybe let's go through the three of you and outline what your sort of the next box you're going to check off is, and then I want to talk about what we're seeing on the client side.
Yeah.
We'll start with you, Greg.
Yeah. So, you know, for us, it's pretty clearly that we want to. So, having acquired Tagomi, almost immediately we had the ability to execute in custody, and our OTC desk makes use of those tools. Tagomi customers immediately got the benefit of having Coinbase. In many ways, both as a counterparty and as a custodian. What we're most focused on is making that even more streamlined and seamless, and that will come in the form of a single integrated app that you know, that around which we'll begin to build lots of other features and functions. But that's what's first and foremost top of mind for us.
So it'll be a prime brokerage iOS app? Is that what you're talking about?
No. When I say app, I'm sorry. I mean integrating what is Tagomi and Coinbase custody together into one UI. That's right.
Yeah. Moro, what is it for you? You guys are kind of working on that as well, aren't you?
So I'll push back on the premise of the question a little bit, Frank.
Go ahead.
I would actually tell you that cross-margining is the #1 thing, certainly for us. But it's the, I don't want to call it the hardest one to solve, because I never want to think that I figured out the full list of issues. At the same time, it's probably one of the most challenging ones to solve that might take some time. So from a what's missing, what would you like to offer? I think that is still kind of like #1 in the way we're kind of thinking about the missing piece. But that may not necessarily be like the next product or service that we're able to kind of like roll out there. You know, our roadmap is included.
That's the holy grail.
Sure, I think that remains the holy grail, and I think we'll get there, pending kind of the capital question that we touched on, you know, a few minutes ago. But look, we're getting set up on to figure out and roll out kind of the agency trading side of the house, and that is an entirely different business than our prop trading business, but that kind of sits alongside our custody business, and we're setting up the Chinese wall, the information barriers and conflict of interest, and how to set this up kind of the right way, so that is kind of separate and distinct from our prop trading desk, because that's a client fiduciary service, as opposed to kind of the principal trading that Genesis Trading has been doing, for 7 years, and kind of getting that right is really, really important. And we're not going to
it's a Herculean task. It
is absolutely. I mean,
real quick, I remember, when Virtu acquired ITG, Doug Sifu came out and basically said that he'd create this like global commission to oversee that the Chinese walls, so to speak, were instilled, of a global commission of asset managers and the like. So it is something that is somewhat without precedence in traditional markets.
Yeah, look, I mean, we've operated a broker dealer. We have the BIT license. We've worked through conflict of interest policies and following kind of the regulation in our legacy businesses. But like I said, it is tough to pull off, and it's difficult to kind of get it right. And we're not going to do it and kind of roll it out until we think we figured it out, kind of the right way to roll it out to our clients.
Carmi, what's next? What's up your sleeve? Or your vest?
We're taking. Can you hear me, by the way?
Yeah.
Our approach, I would say, is a combination of Greg's and Mike's approach. We're a little bit late to the game in terms of trading, but we're moving very fast. I agree with Greg on what we're doing is, we acquired Lumen at the beginning of the year, which brings to our requirements and offerings to the clients a portfolio reporting and tax reporting platform. So that's all being consolidated as we speak into one offering for clients. You go into your wallets, custodial, you can see the reporting, the tax, and everything else, as well as now you can trade. I want to go a little bit different from Mike. We're not as much focused on margin financing as much we're focused on the concept of a line of credit. They're almost one and the same, right? They're almost one and the same. But again, we're all sort of racing to get to that ultimate solution that we can provide our clients. So you're going to hear, we're making some announcements between the next couple of weeks and the end of the year about a couple of services we're rolling out that are standard services in the prime services space in the institutional markets.
Okay, just don't give them to CoinDesk. That's all.
Yeah, and we're going to time it for your vacation.
On my
vacation. Yeah, tell us when your vacation is. Yes,
that's on my vacation.
Yeah.
I feel like we've been we've gone granular. We're sort of tackling some of these pedantic market structure questions, but I want to talk about maybe something that more casual viewers would be interested in, and that's the clients. Everybody wants to know what major hedge funds you guys are talking to. I forget who I was talking to most recently. I guess it was over the call when we were prepping Moro. You were the first to jump on, as a good sponsor typically is, and you were saying the phones were off the hook. So let's maybe all talk about our respective clients' experience. Greg, you guys had some news this morning. So where is most of the demand coming from? And I'd be curious to know, Moro, is the OTC demand or clients or flows different from the folks coming in for the prime, or is it basically the same and now you kind of look at it as being, all under the same roof, so to speak?
I would describe kind of our client flow in several different buckets, right? So we have the grayscale flow. So that is kind of cash inflows, cash creations into any one of the kind of the grayscale funds and products. And so that is a constant flow that we're out in the marketplace sourcing crypto and kind of placing that into the charts for the creation of the share. So that's kind of there, and that certainly has picked up in the numbers that have sort of been well reported and kind of published. Then there's the what I'll call the retail aggregators, where Genesis serves as kind of the back-end liquidity provider to a lot of other companies that are servicing more retail clients. That flow is probably up, probably 8 to 10x from compared to like a year or 2 years ago. And then there's kind of our regular OTC flow, and that's our traditional kind of like core clients, kind of the high net worth individuals and the family offices and the hedge funds. And you know what I was kind of referring to kind of phones ringing off the hook is it's less, people don't really call anymore, they just like text. So it's just text messages kind of like blowing up my sales team.
You up?
Hours of the night. Exactly. But it's I need to, you know, buy, you know, it's always I need to, you know, buy X million dollars worth of Bitcoin like right this second type of things. And so kind of quality issues to have. And I'm sure that experience is kind of like shared by everyone else on the call here.
Carmi, what's the experience been like over at BitGo?
I mean, look, it's for us, the experience it's been great. It's our sales team. I mean, they're doing an amazing job. We're getting a lot of reverse inquiries we're getting inquiries from existing clients that want more services because they realize that we can provide more services. We're getting a lot of reverse inquiries from clients that are not getting the type of service we provide that they are with other providers. And then similarly to what Mike said, we're getting a lot of inquiries, and this is the hard work of our sales teams that have been doing throughout this year, is from institutional, I don't want to say institutional clients, but institutional grade clients that are looking to, wait a minute, am I missing the boat by not getting into the crypto space? And hey, how do we get into the crypto space? How do we want to buy Bitcoin? Can you buy us Bitcoin? Can we do this? So a lot of high net worth individuals, family offices, even you know, hedge funds, large hedge funds from the institutional markets that are saying, hey, you know, we're operating quant strategies and we've been trading for many years. Why are we not in this space? What do we need to do to get in this space, and how do we get into it?
Mm-hmm. Greg, we reported this morning that you had facilitated, Coinbase helped facilitate the purchase of more than $400 million on behalf of MicroStrategy, the Virginia-based, I guess you'd call them business software, business analytics company.
Yep.
And this speaks to this trend that everybody's talking about, but we've really only seen two examples of.
Yeah.
So apparently all these corporates want to get into Bitcoin, but we really only have MicroStrategy and evangelist Michael Saylor at the forefront, and then Square with Jack Dorsey and other crypto nuts. My mother would probably call them, not me. So is it a real trend, and to what degree is there an actual pipeline for folks like that?
Good question. So zooming out a little bit, back to the taxonomy of who are the clients here when we talk about institutions, not anybody, not retail. We see a lot of interest from basically all of them. And so, you know, that's first and foremost, starting with macro hedge funds, but, you know, there's this arc of high net worth CIO or owner of fund, trades for their personal account, gets comfortable, then does the hard work of getting the fund docs and everything else in place. And then recently some of those founders putting client money into crypto, I think was a watershed moment and de-risked a lot of other client funds coming into the space. And so I think we're really starting to see not just CIOs trading in their PA, but those same funds really now engaging in trading and custodying spot. And it starts with macro, but I think from a hedge fund strategy perspective, it starts to build out around, you know, to more fundamentally driven long short strategies, sort of the go anywhere type strategies. And so that arc of high net worth begets hedge fund client, we see quite a lot of. On the corporate side, you know, we do post MicroStrategy see other interest there. There are a number of very cash-rich companies that are interested in diversifying their treasury holdings, have a fundamental macro view on the dollar, and are investigating Bitcoin. So we have a number of those. We also, to Michael's point, see the opportunity to provide services to challenger banks and others who all would like to provide. You've already got this app. You're facilitating somebody buying their first Bitcoin. A lot of people are in position to do, but don't have it yet, and so facilitating that is an opportunity. And we do see, in the wake of the OCC's announcement that banks can hold crypto on balance sheet, quite a few banks that are seriously engaged in the process of investigating crypto on behalf of both their own private wealth clients as well as their security services type businesses that are custodying for hedge funds. I do think there are more corporates in the pipeline, and I think Michael and MicroStrategy really paved the way for people to invest.
Yeah, a random software business analytics company in Virginia. Who would have thunk? Moro, how many companies are we talking about, you think, looking to do this? Corporates who will allocate Bitcoin as part of the treasury allocation strategy. I mean, is it
define corporate here? Are we talking publicly
traded companies?
How many publicly traded companies are going to within what time frame?
Over the next year.
For the next year, I'm going to say I'll put the number at 250.
Okay, that's significant. So that's a pipeline that all of you will be keen to compete over. And then there's also this sort of fintech play that Greg was talking about, which Paxos, which is not on this panel, has seemed to carved a niche for themselves in, sort of serving as the back end to PayPal, Revolut, so that those firms can readily and easily offer crypto to their clients. My mother used to tell me the first girl you date isn't the one you'll marry. Carmi, how do you convince Revolut and PayPal to leave Paxos and leverage you guys as a liquidity and regulatory backbone?
I mean, we're a different business than Paxos, right? I mean, sure. We're a custodian. We provide security. We provide peace of mind, and then we're not operating an exchange. If they want to come and work with us to be able to connect to multi-platform to get multiple feeds with different pricing and best execution, that's what we can provide, right? And among many other services that they need, being able to give them access to to parent account and sub-level accounts and all the reporting that we provide because of our acquisition of the Lumina portfolio platform is not something that Paxos can provide or anybody else can provide. Right. Now, are we again, I'm going to go back to the same comment. This is not a one company solution. This is a multiple company solution, right? I agree with Greg and Mike. They talked about the clients, and we see the same clients. I mean, it's not a big ecosystem, right? Clients are very smart. They're going to call everybody, and they're going to find the best one or two providers, and they're going to go with them, right? But what we're seeing additionally on our side, it'll be interesting to see what Greg and Mike, maybe because of my background in prime brokerage for many years, we get a lot of reverse inquiries from the prime brokers themselves, right? More so from the FX prime brokers than from the equity prime brokers, right? They're interested in understanding how do you get comfortable with this? I've ran prime broker businesses in the past, so clearly they come to you, it's like, okay, what is so different about this? And we have a lot of discussions. So look, Greg mentioned the banks. Yes, the banks are looking at this for the asset management, wealth management, and whatever businesses they're trying to do. But for the prime brokers to come and say, hey, can you talk to us about this? It means that their clients are coming to them and saying, hey, you guys are right to provide this. Right?
And that's another angle. That's another maybe client bucket. It might be a smaller one at this point, but banks that are looking for sub-custodians or sub-prime brokers. Raise your hand if you've been in contact with a bulge bracket bank about being a sub-custodian. I'll start. There we go, all three. So is that, with the OCC news greenlighting sort of digital asset custody, that's surely another avenue for you guys to explore.
Yeah. It is for sure.
Yeah.
I think that is going to be a growing opportunity, largely custody driven, in the coming year for sure.
Mm-hmm. We have a ton of questions that have been pouring in. We're getting towards the end of the session. It's flown by. I've had a ton of fun. This has probably been the best webinar I've done. No offense to the previous ones, but that might be sunny Florida speaking, not necessarily the panel. But I want to look at some of these questions. There's some fun ones here. We have one from Kevin Dodery from 11 minutes ago, which I think is actually pretty interesting. Once prime brokerage in traditional financial markets became commoditized, cap intro, capital introduction became the #1 reason to choose one PB over another. Basically, the point he's making is that this will boil down to a sort of relationship business. Do you see that being the case down the road?
Absolutely. I mean, it's, again, the cap intro is a very key offering to the prime brokers. Some prime brokers in the financial markets, of course, they are a lot better than others in cap intro. Like, maybe, you decide, a lot of decisions sometimes are made from a prime broker perspective in the financial markets are based on services and not only on funding and leverage and
sure
and rates and financing. So yeah.
I agree with that. I think, and there are many on our sales team that ran cap intro for in prior lives as part of prime brokerage sales teams, etc. But I do think some of that will need to wait for funds to develop track records so that they can be introduced to. So to the degree it's not just a buy and hold type strategy, and you're helping somebody who doesn't want to hold cash, crypto themselves, introducing to a number of firms that, the crypto hedge fund side of this is still, in the scheme of things, fairly nascent, and I think has more building of track record to do to be introduced to, and so I think that will take some time to develop.
I agree. Look, here we are kind of working in this trustless, decentralized technology world, and all of us are talking about centralization of services, trust, relationships, and all of it. And ultimately, the PB experience is that like white glove, high touch, relationship-based business. And I think that value proposition as to why you would choose one prime broker or another, it is that reason. And I don't necessarily, and I think that's good. I think that is a key value proposition, to feel like you have a trusted relationship with your prime. The ability to feel like your PB is looking out for your best interests, whether that be on the execution side, custody side, or helping to raise funds on the cap intro side. I think that aspect is a value added to the space, and certainly what the institutional investors from traditional markets are expecting to find in crypto. And if they don't, again, I think that'll be a barrier to entry and kind of friction for the traditional investors.
Mm-hmm. And we shall see. We will be observing closely.
I will go just one step further on the cap intro side, which is very important.
Yeah,
I agree with Greg. Right? I mean, the crypto hedge fund market is very nascent and it's very new, but you can use that service to educate the institutional investor community, right? Because a lot of the pension funds, endowments, asset managers that regularly invest in hedge funds, right? They want to come in. They're not going to invest $500,000. They want to invest $5 billion, and we all know there is no one company out there that can absorb these big investments. But you can use these services as an education, as a ramp for these investors to start understanding more and more the ecosystem and the way you educate them, not only from the services you provide, but also putting them in front of these investors that you believe are running a business very much similar to the way they would run a business running a long short equity fund or a macro fixed income fund or a mortgage fund.
Mm-hmm. Barry O'Connor raises the question, says that he agrees with Michael. This is a high-end service, but will the new clients actually or need or want this level of service given the ease of execution?
So I actually think new entrants into crypto need the high-touch service more because it's a new asset class, because navigating, the complexities of custodying a bearer instrument, concerns around security, just sort of the white glove service of helping somebody into the space for the first time is more critical, I think, than in any other asset class, just given its nascency.
Mm-hmm. Which raises the question of the challenges and risks that come along with custodying and providing PB services for a bearer asset like Bitcoin. But that could be a whole nother webinar, probably. Ladies and gentlemen, thank you so much for tuning in. The state of prime brokerage in the crypto market. We appreciate your attention. We appreciate your questions. We hope this was edifying or at least interesting to you. And hopefully we'll all come back in a few months and have a similar conversation. Thanks everyone for joining us. I appreciate your time.
Thanks for the invitation.
Thank you very much. Cheers, everyone.
Thanks, guys.